Welcome to another financial analysis video. Today I'm going to talk about the most popular stock in the S&P 500, Apple Incorporated. Apple is an interesting company, very innovative, great products. I personally haven't owned any Apple products for several years now, but that doesn't mean that they're bad. And I wanted to talk about the stock today because I was wrong. Sometime a couple years ago, I wrote a very soft piece on Apple in which I didn't necessarily say the stock was going to go down, but I didn't feel good about the stock going up. And one of the things I mentioned in that article was how they would need good earnings growth in order to appreciate on price. Well, they got it. They certainly got it, and they did very well. Now, Apple lately, going back to the snapshot, has really been in a little bit of a decline. Not significant, but you know, people scream fire over in China, and people think it's going to affect Apple, and so the price has taken a bit of a beating lately. But what I want to do is I want to talk about some of the things that make me feel very good about Apple as a stock, and I'll have some other conversation points about the stock as we go along. But first, Apple has met or beat earnings for 11 consecutive quarters. Okay, this is very good. I like to call this earnings credibility. It gives me the ability to look at forward earnings and assign a multiple to those forward earnings and feel confident that the company is going to meet those earnings. And, you know, another case here, not just meeting and beating, but right down here. In the last two quarters of 2017 and the first two quarters of 2018, so Q3 of 17 is the first quarter of the next 12 months, Apple is projected to have $11.40 per share of earnings. That is less than 10 times its current price. That is pretty cheap. And so if Apple just stays on its current trajectory, it will easily not only eclipse that in terms of an earnings front, but really the stock would go to $140, $150 at this point. I also want to point out before I move on, some people may be quick to say, well, look at this decline in earnings. Well, the first quarter is actually Apple's most significant earnings quarter. It really is, I don't want to say it's a seasonal stock, but you have to look at its preceding four quarters to compare. So really, earnings aren't declining. They're going from 207 to, in the same quarter a year later, 306. Second quarter, 166. A year later, 233. Third quarter, $1.28. A year later, $1.85. So the stock, or excuse me, the company is earning a lot of money. Now also, Apple has a growing dividend. And the dividend yield for them is approaching 2%, which isn't earth-shattering, but I want to draw your attention real quick to something here, and that's the payout ratio. Apple's payout ratio to its earnings is very low. In fact, the company is retaining, in most cases, more than 70% of its earnings each quarter. So there's room here to grow the dividend if Apple wanted to. Apple is paying out $11.6 billion in dividends on a trailing 12-month basis. Their free cash flow, $69 billion over the last trailing 12 months. So clearly, dividend expansion could be in Apple's future and another case to buy the stock. The other thing is you just got to look at this trailing 12-month revenue chart. The company is growing. It is certainly growing on the top line, and it's growing on the bottom line. The return on equity, equally as impressive, almost 40%. These are the types of numbers we see in growth companies. Yet, Apple is trading at 12 3/4 PE on a trailing basis, 11 2/3 on a forward basis. That is very cheap, and that is the wrong column there. That is the reflection of the Chinese fears going on. And if you look at, this is the PE chart. I'm going to kind of zoom in on this to give us a better look. The blue is trailing PE, the red is forward PE, and you could see that the stock is really trading pretty much at a 52-week low in price to earnings. So while it's not quite on a 52-week low in terms of price, compared to its relative earnings it is, both trailing and forward. And so Apple presents a really interesting opportunity. I hope you enjoyed this video, and happy investing.